On the 2nd of November 2022, the Day of the Dead was celebrated by many Mexicans across the world. The tradition of facilitating the return of departed souls to Earth, perhaps the souls of those who had recently lost tens of millions on the exact day to their crippling crypto trading addictions, though I cannot say I was not one of them. And this was no coincidence, however, as you can be rest assured that there was no voodoo involved. And no, I'm not talking about the Terra Luna crash, we're way past that now. I'm talking about what is known as the FTX scandal. Welcome to True Paradigm, a channel where we give our viewers a holistic view on the world. For starters, FTX is a platform allowing users to trade cryptocurrencies such as Bitcoin and Ethereum. Now, we should ask the real question, why did the FTX collapse really happen? To find out, we must understand a bit more of the company's background and travel a bit further in time to when it was founded. In April 2019, FTX was founded by Samuel Bankman Fried, a young American entrepreneur who was only 27 years old at the time. Bankman for some time held a reputation for being the crypto savior, as he emerged from the Terra Luna crash as a gallant knight in shining armor by buying two companies, Celsius and Voyager, both of which had crashed during this time and filed for bankruptcy due to their debts. He proved to the public that this was an act of altruism as it would save the investors from losing all their assets. However, this image of him was all an illusion, as you'll find out a bit later. It was not until early 2021 that the FTX exchange gained a massive popularity and saw large volumes of money being traded and eventually became the third largest crypto exchange in the world. This graph shows the trading volumes of Coinbase versus FTX from the beginning of 2019 to mid-2022 before the FTX collapse. The reason it became so popular was surprisingly low trading fees, which were lower than its competitors in 1 and 2 place, being Binance and Coinbase. It is evident that from mid-2021, FTX was either just below or on par with Coinbase in terms of volumes of USD traded, and if the collapse were not to have occurred, it would have overtaken Coinbase. But it didn't. Well, you see, Bankman Fried co-founded a company 2 years before he left it and went on to found FTX. This company was named Alameda Research, which was a trading firm or a hedge fund. On-chain analysis showed that in late 2021, large amounts of assets in the form of FTT had been being transferred from FTX to Alameda Research, reflecting the high-risk bets Sam Bankman-Fried was participating in and their liabilities worth anywhere between $10 to $50 million, as revealed from later findings. Hence, this indicated that the majority of the FTT tokens were owned by Alameda, highlighting the illiquidity of the asset we mentioned earlier. This meant that it was essentially worth the same as a plastic bag of trash. Yet, many obvious individuals, not including me, obviously, still held on to the asset. Through the transferring of assets, it was revealed that FTX and Alameda lost $3.7 billion in 2021 alone, and this was only the beginning as 2022 had not yet begun. It was later uncovered that Bankman Fried went on to transfer more assets, with total being much as $10 billion. This would only guarantee FTX's eventual death, as after reaching a peak valuation of $32 billion in January 2022, the exchange began to slowly decline in value until November 11 of the same year, where the company filed for bankruptcy. What sparked the chaos was that on November 2, CoinDesk, a news site specializing in digital currencies, reported that Alameda Research was run by the man himself, Samuel Bankman Fried, and held $5 billion worth of FTT in this trading firm. As the majority of the investment in FTT, this caused concern across the cryptocurrency industry with the undisclosed leverage and solvency of that company. The price of FTT began to drastically decline from November 6. Although Bankman Fried continued to reassure his investors of the stability of FTX's assets, the withdrawals worth $6 billion were made, lowering the value of FTT by 80% in just 2 days. On November 8, Binance came to the rescue and announced that they would purchase their rival company FTX's non-US operations, a saving grace which would save this exchange from the depths of despair and stabilize the liquidity of its assets. Or so you thought. This announcement was short-lived as a day later, Binance withdrew their decision and many concerns, which included the mishandling of customer funds. And so the whole world watched FTX crumble, as Bankman Fried struggled to get his $8.9 billion required to bail out the exchange. As for him, he was arrested in the Bahamas on the 12th of December but was released on a bail of $250 million, known as the largest ever pre-bond trial. He must also surrender his passport and live with his parents until the next hearing on the 3rd of January, to which he pleaded not guilty. If you have enjoyed this video, please consider hitting that like button and subscribing to support the channel and turning on that bell notification for updates for our future videos. Stay happy, healthy, and until next time, peace out.